This is Eric Mwatha with Mwatha.com for the week of April the 23rd, 2012. Let's take a look at the charts here. We have, let's begin with the QQQ, which had the second weekly down close after having 14 straight up weeks. We have 2 weeks to the downside. Really, that's the first back-to-back down weeks in 2012. But really what I wanted to share with you here, even though the pullback is, it's shallow because we are still trading above the 10-week moving average and still trading above the 13-week moving average. So it's really, as far as I can tell, a normal breakout or a healthy breakout after this, healthy pullback after it had broken out here sometime in early 2012. So the pullback to me seems to be healthy. You can't have 14 straight weeks of positive gains without a pullback. So net, you can't really necessarily tell that this is a serious pullback from the weekly chart. But now, what is interesting, if you take a look at the NASDAQ 100 monthly chart, going back to this chart is going back to 1999, and what you'll notice here is on the RSI, let's see whether I can show that. On the RSI, you'll notice that if you take the highs of the RSI since the tech bubble in 2000, the highs in late 2007, and draw a straight line on the RSI, you end up with where the market just turned around the month of April. So this happens to be a sell signal as far as the monthly chart for the NASDAQ 100 is concerned. Just using this chart by itself, one can conclude that they need to be out of this market. This is a serious sell signal unless the market can find a way to come back in the coming months and break out. But for now, given that this is the chart that we are seeing, one can only conclude that the market is preparing month to month, or let's say medium term, or for the rest of 2012, the market is preparing to move lower. Now if you take a look at the French market on a weekly basis, you'll notice that we have an impending crossover between the 10-week moving average and the 33-week moving average. That's bearish. The last time we had that kind of a crossover was sometime in May of 2011, and that crossover, which was bearish, led to this huge sell-off in Europe. So this might be the setup for another move to the downside as far as European markets are concerned. That's the weekly on the French market. Another example of a monthly chart here from Europe is a French CAC 40 on a monthly basis. You'll notice that if you take the highs on a price channel, take the highs over the last since 2007, draw a straight line, you'll see that we hit that level sometime over the last month and a half, and we are pulling back. So again, the French market monthly chart is showing us there's a sell signal, a broad sell signal as far as the entire European market is concerned. If you take a look at the EWZ, which is a Brazilian market ETF, you'll notice that we have another impending crossover between the 10-week moving average and the 33-week moving average. The last time we had that setup, which was bearish, was sometime again middle of 2011, which led to this serious drop. So we might be setting up for another move lower as far as the Brazilian market is concerned. Now if you take a look at the IYR, which is a real estate ETF, we almost made a 52-week intraday high here as far as price is concerned, which is good. But what is really troubling is the fact that the RSI did not follow through, as the RSI is now about trading, making lower lows, and which is a indication that the technical picture is not following the price. That is going to lead to a negative divergence, and usually if this market pulls back from current levels here, which means almost making fresh highs, but the technical picture not following through, we might see a significant pullback in this market, probably coming back to the 200-day moving average if this remains the chart going forward. If you take a look at the CRB Index, the commodity space ETF, you'll notice, or the index, the CRB, the index that tracks a broad space of commodities, You see that if you take the lows of 2009 and the lows of about late last year, draw a straight line, which is a gray line here. This line is we broke down below that, but more importantly, notice that the 10-week moving average is just about to break down to fresh multi-month lows. If that is the case, then that might suggest continued push to the downside. Again, the 10-week moving average is just about to make a fresh low. This would be a multi-month low going back, lows not seen since beginning of 2011. That might suggest that prices are gonna be pushing lower. If you take a look at copper on a weekly chart, you'll find that again we have a bearish crossover between the 10-week moving average and the 33-week moving average. The last time we had that setup was mid of last year, 2011, and we had this big drop. Again, copper is a leading indicator as far as world market direction is concerned, and sometimes it can tell you where markets are going. So copper is showing signs of a weakness. If you take a look at the copper daily chart, we see that we are trading below the 50-day moving average and the 200-day moving average. The only way copper can repair its charts, it's by moving back above the 50-day moving average and the 200-day moving average. So long as it stays below the 50-day moving average and the 200-day moving average, then that's going to suggest that copper is also going to be pushing lower. For now, we'll see what happens. We seem to be trading in this kind of a triangle here. If you take the highs, draw a straight line, take the lows, draw a straight line. So we are trading in this triangle space here. At some point, we're either going to resolve by moving higher or by breaking down and seeing prices go lower. So right now seems like no man's land. Take a look at FAS, and you'll see that FAS is a 3 times bull financial space ETF, and sometime 2011 we had established this as a support area right here, but what happened is once we broke down there, we had this big drop in the market, multi-month drop. And what we've done basically in 2012 was come and hit that level here. So we banged head with the highs here. This has become a roof now, and the market pulled back. So that was a sell signal. But really what I wanted to share with you was the RSI. The RSI seems to be telling us, if you take the highs on the RSI and draw a straight line, you see that we hit those levels about 4 weeks ago, and we started selling off. So that was an indication of resistance on the RSI. Also, if you take a look at this level here, just this line, the turquoise line which I draw here, you'll see that once we hit that, we moved below that level in 2010. That was corresponding to the highs in the market in 2010. Once we hit that level and pull back, which is here, once we pull back here in 2011, that was a high in 2011. So the fact that we are stalling here might suggest that this is the market high for 2012. Again, let's take a look at FAS from a monthly chart. If you take the monthly closing highs in 2008 and the monthly closing highs beginning of 2011, draw a straight line, which is this line I draw here, you'll see that the market found resistance exactly on cue right there, which might suggest the next move in the market is probably lower, unless this market can figure out how it can break out about this line. If it can break out about this line, then the market is off to the races. But for now, we are finding resistance there. So suggestion is that the market is month to month gonna be seeing lower prices. Let's take a look at Bank of America as an example of what's going on here. And what I wanted to show you is if you take a look at the RSI. Now, Bank of America was trading as high as in the 40s, mid 40s in mid 2007. But now notice that as Bank of America pull back, every time Bank of America has been finding resistance on the RSI on a monthly chart here, on this line here, which I draw here, this red line, resistance here connects to this sell-off here, another resistance level here, which corresponds to the highs in 2010 there, another resistance here, which led to that high in 2011 and this big drop, and now we are finding resistance again here, which might suggest another move lower for Bank of America. So the RSI on the monthly chart is really giving us a sell signal as far as Bank of America is concerned. Let's take a look at Morgan Stanley. You'll see the same setup as far as the price channel. You take the highs in Morgan Stanley going back 2007, take the closing highs, draw a straight line. You'll find that this connect this high and this high, 2011 highs connect to 2007 highs. You find that we are finding resistance exactly where we should find resistance as far as Morgan Stanley is concerned. So again, the indication is, as if this market doesn't break out, this has been confirmed resistance and we might be pushing lower. If you take a look at the Morgan Stanley monthly chart, again, confirmation. If you take the highs in beginning of 2007 on the RSI and the highs 2010, draw a straight line, you find that we are hitting resistance right now, which might suggest lower prices are coming in this market. If you take a look at JP Morgan, again on a monthly basis, you'll see that if you take the monthly closing highs, you see that you draw a straight line here. This corresponds to Morgan Stanley being down 6% month of April so far, because it's hit this line here, which has been resistance going back many months. Also notice that the RSI for Morgan Stanley, if you take the highs on the RSI of 2007, highs in 2011, draw a straight line, we are finding resistance, which is a sell signal for JP Morgan right now, which might suggest a market that wants to go down in the coming weeks and months. So as far as I can tell, it seems to me that the market is in no man's land right now, but lots of sell signal on the big picture charts, like the monthly charts and the weekly charts, might suggest to me month to month this market is gonna be moving lower. This is Eric Muada with Muada.com. Peace and blessings.